What happens when the resolution applicant or a bidder asks for too many concessions or reliefs? Should this be allowed or not? Whether the NCLT should allow all or not. We analyzed all these 40 reliefs and concessions and categorized all those reliefs. What is granted and what was not granted. Do you think that this is a correct understanding, a correct observation of the court, or you think that otherwise this is not a clean slate? And this conversion will take effect immediately on transfer date. So this was rightly not allowed by NCLT, and NCLAT also said that this is very correctly. Welcome to 184th episode of AAA Weekly Webinar Series. Today, we are trying to resolve a very large question which we have been getting from various professionals. What should be the reliefs and concessions that we should ask from NCLT, maybe in the case of approval of a resolution plan or sale of the company as a going concern in liquidation process? In both these scenarios, an application is filed before NCLT and there is a tendency to ask too many reliefs, too many concessions. However, very recently, NCLAT has given a directions on this issue. In the case of Shanti International versus Ram Singh Setia, the liquidator, and in the case, the NCLAT has in fact said a lot of directions to all these resolution professionals, resolution applicants, liquidators, and all those bidders who have submitted a bid for taking over a company in a liquidation process. What happens when the resolution applicant or a bidder asks for too many concessions or reliefs? Should this be allowed or not? Whether the NCLT should allow all or not. This is what we are going to discuss in the case of Gajanan Solvex Limited, the corporate debtor, where the resolution applicant, no, the bidder, because this was a company under the liquidation and this was a sale of the company as a going concern. So the bidder, in fact, asked for too many reliefs. Total 40 reliefs was asked. Out of the 40, many was accepted and many was rejected. In fact, out of the 40, 22 reliefs were granted and 18 reliefs were rejected by NCLT, and the bidder filed an appeal before NCLAT, and NCLT gave its observation, which is very useful, which we are actually going to discuss, slice and dice in today's episode, which is 184th episode of AAA Weekly Webinar Series. So this is a case where this corporate insolvency resolution process was started on 20th of July 2022 and the liquidation started on 1st of March 2023. During liquidation, the liquidator sold the corporate debtor as a going concern in liquidation process, and a bidder was successful and he submitted an application for permitting the sale of the corporate debtor as going concern and also sought 40 reliefs. We analyzed all these 40 reliefs and concessions and categorized all those reliefs. What is granted and what was not granted. And according to this and coupled with the observations of NCLAT, we are trying to create a scenario what should be applied and what should not be applied. We are also trying to clarify what would be granted and what can be rejected. We will go by various such reliefs and concessions one by one. If Ankit you can add like what is your observation about these reliefs and concessions which are being sought by, may it be a resolution applicant or may it be a bidder in liquidation process?
I believe we have seen earlier judgments as well where the resolution plan proposes certain reliefs and concessions, and we understand that those reliefs and concessions are limited to the reliefs and concessions that are belonging to prior to CRP period. We have also seen cases where excessive reliefs and concessions have been asked for, where sometimes even for the period post CRP, and that have been dispensed with by the NCLT. This, however, is a case where a successful bidder got the sales certificate, applied for reliefs and concessions, and transfer of ownership through liquidation to the NCLT. And that's where this judgment has come up, where certain reliefs and concessions have been declared to be overreaching. And I believe it is very important to understand which ones were found to be overreaching so that we can be conscious in our approach, whether we are preparing a resolution plan or whether we are applying to NCLT for transfer of an entity as a going concern in liquidation. This is what I believe that this analysis will give us to practice.
Successful bidder, and we can also have the same scenario for a resolution applicant. In fact, applied for various concessions. So I would be take you all through one by one. First of all, that particular category which was allowed. Starting with the very first one, the successful bidder or a resolution applicant certainly asked for clean slate or a clean break from all past liabilities, dues, claims and obligations, and NCLT granted this. And yes, definitely. However, there was a condition in that order, and only up to the period to insolvency commencement date. This is something that I wanted to clarify, that all those concessions and reliefs are only applicable up to the insolvency commencement date, because once the insolvency starts, then it is all called CIRP cost or liquidation cost in case this is a case of sale of company during liquidation process. Any obligation, any liability, any penalty which pertains to CIRP period or liquidation period has to be paid in full. So therefore, the reliefs or concessions are only and only applicable to a period prior to insolvency commencement date, not after that. So I have seen various resolution applicants or successful bidders, they are asking for reliefs and concessions till the date they have taken over from the RP or from the liquidator. Whereas this is incorrect. Concessions and reliefs can be granted only up to insolvency commencement date, not thereafter. If there is any obligation, if there is any kind of litigation, if there is any kind of penalty, any kind of fine, which actually has incurred or pertains to a period after insolvency commencement date or liquidation date, then it has to be paid in full. First, it can be part of the CIRP cost or it can be part of the liquidation cost, but it cannot be granted as a relief. It cannot be extinguished because during this period, everything was under the control of RP or the liquidator. So whatever liabilities are incurred, it has to be either part of CIRP cost or it has to be part of the liquidation cost. Therefore, the grants that you would be getting from NCLT, that would be only up to the insolvency commencement date. Ankit, can you elaborate this? See, like, is it okay that what I'm saying? Because I have seen many uh, reliefs that they are asking, that they are saying that we would be only liable to pay the dues from the date we have taken over the company from the RP or from the liquidator. They are correct. But in between, it should also be very clear that this particular liability will be paid by the RP creditors out of the CIRP cost or out of the liquidation cost.
So it's about and ultimately when the resolution plan is implemented, we do find that the resolution applicant takes over the costs or starts bearing the cost only after the NCLT approval date. But I believe the language matters here. So the language that needs to be differentiated is that what happens or how the resolution applicant gets a clean slate for liabilities which were due up to the ICD, insolvency commencement date, and how the liabilities or the expenses which are outstanding or due for the CRP period become part of the CRP cost. So in case you look at any resolution plan, you will have an X amount which is payable towards CRP cost or unpaid CRP cost wherever the company's operations are not providing for the CRP cost to be paid. Then you have subsequently you have the payments to various creditors. So in case the CRP cost has been provided for X and it turns out that it is not X, it is 1.5X. In that case, you will have some reduction in the distribution towards the creditors. That is how we structure resolution plans. So this is what should cater or take care of the deficit in the CRP cost. So this is how the cost which is required to be incurred from the ICD till the resolution plan approval by NCLT needs to be taken care of, not by saying that it's a relief and concession that I will pay only after the resolution plan is implemented.
So various other concessions which has been granted by NCLT, I will quickly take you through all. Directions to liquidator, or in that manner also the directions to creditors or directions to the RP. These are all mostly granted. Means directions to liquidator, directions to RP, directions to creditors. These are mostly granted. I will just take you through some of them. Modification or satisfaction of charges after the payment is made by the bidder or by the resolution applicant. Granted. Handover of the original title documents, granted. Updating the information of payment or no default to information utilities, granted. Issue of no due certificate from financial creditors, secured or unsecured, granted. Handover of document essentials for operations of the corporate debtor, granted. Assignment of liabilities due to financial creditors in favor of the bidder. So in this case also, assignment of liabilities due to financial creditors in favor of the bidder, that depends whether it is a case of assignment or it's a case of extinguishment or reduction of the credit. So that is subject to whether it has to be granted or not, but it is granted in this particular case and it will be granted in many other cases. Bidder will have a clean title over the corporate debtor and its underlying assets, granted. To use, but it was again said very clearly that whatever we are saying, it is only and only up to a period prior to the insolvency commencement date. To use and exercise all intellectual property rights of the CD, granted. To continue and manage the business operations of the corporate debtor, including the powers to revise, amend, granted. Even terminate existing contracts without needing further approval, that was also granted. Terminate existing contracts was granted. So I think this is something that actually belongs to claims and other things. Concession sought, relief sought was all past penalties, fines, statutory dues and liabilities of the corporate debtor under any law be waived, settled and extinguished, treating past offences as compounded, granted, because it was also allowed under section 32 capital A and otherwise also under section 53. Whatever is paid and whatever is left not paid, that also stands extinguished. So this was also granted. Any liabilities, penalties or compliances obligations under edible oil sector regulations before the transfer date, because this company was basically into edible oil, so therefore basically sectoral liabilities, sectoral penalties, sectoral non-compliances of the past, that was granted, but not for the future. It was granted for the past. Then all necessary no objection certificates from mortgagees and the IRP of the erstwhile promoters. Or see, like this was also necessary no objection certificates from mortgagees and the IRP of the erstwhile promoters directors under PIRP have been obtained. Now, this is something which the NCLT has not granted and said that may apply to concerned persons or authorities, which is something which is, according to my understanding, any kind of outside interference, maybe it is from promoters or from mortgagees. If they have filed the claim, this is normally granted. Then authorizations for the corporate debtor to file statements and returns for pre-sale period through the successful bidder or its nominee. No, it was granted with a kind of uh, condition, granted for prior period to insolvency commencement date and subject to requisite compliances, payment of fee, etc. as per applicable laws. Now the question comes here is that in case the CIRP started and there was some compliances to ROC was pending as on that date, as on the ICD, insolvency commencement date. Also, for another 2-3 years, some compliances were pending. But in this particular case, the waiver and concessions were granted only up to the insolvency commencement date, not beyond that. It actually means that once the insolvency starts, on the insolvency commencement date, after that, all compliances are supposed to be done. In case it has not been done, then you are liable to pay all the late filing penalties and fines that has to be paid. So that cannot be waived. So this is also very important to understand. Then the further relief was all rights, titles, and interest in the corporate debtor, including assets, properties, contracts, and approvals, shall vest in the successful bidder or the resolution applicant, free from all kind of security interest or encumbrances. This was also granted very clearly. Something which is the all pending property tax, gram panchayat dues, rent, fee, or premium shall be deemed extinguished only up to the date of insolvency commencement date. It was granted a direction that all guarantees issued by the corporate debtor on behalf of any third party shall stand extinguished on the transfer date. Yes, it was granted that any kind of guarantee, corporate guarantee, whatever was given by the corporate debtor in case of any related parties or third parties, that will stand extinguished. And also, then a direction be issued to change the corporate debtor status in the ROC record from under liquidation to, that was also granted. That's very, very normal. Directions to electricity department to waive all past liabilities from the transfer date and retain the security deposit. This was also granted. Now, these all were granted. Let us understand all this. One, it was impacting the creditors. It was impacting the liquidator. It also may impact the RP. So everything is granted. Now coming to those kind of concessions and reliefs which was not granted. Would you start, Ankit, which is not granted, or should I continue like what is not granted? I will take one important, which is the relief number 11, where the bidder, successful bidder, in fact, sought directions to various departments, including Central Board of Direct Taxes, GST Department, Provident Fund Department, ESI Department, Food Safety and Standard Authority, Maharashtra Pollution Control Board, Fire Department, Land Department, Stamp Duty Department to provide the corporate debtor and successful bidder relief from all past litigations. From all past litigations, tax dues, penalties, and compliances, obligations, and continuations of existing certificates where the NCLT has said not granted, and also said that the successful bidder may apply to the concerned authorities. Appellate authority, in fact, discussed this particular relief at length. And what my understanding is that all litigation will stand suspended and finally extinguished. My understanding is the all past fines, all past dues will stand extinguished, but it was not granted, and it was said by NCLT that the successful bidder may approach all these respective departments. And appellate authority NCLAT has also said that there is no error in NCLT order, and the successful bidder, or in that manner even resolution applicant, will approach all these authorities. Whereas the relief was sought only for extinguishment of dues, not any other direction. Even if it was a sectoral authority, even it was something which is the financial implication of past non-compliances, that actually is normally allowed and it should have been allowed. What is not allowed is directions to the authorities to do a certain way, which is not allowed, but that is not within the powers of NCLT. Then in that case, the NCLT will say that go to that department and seek their approval. That department will understand that this company has gone through insolvency process and the management has changed, and that department will consider. So Ankit, how do you find the most of this NCLAT order is focused on this particular relief, that whether NCLT can give directions to all these departments. However, the relief was only saying that from the past litigation, tax dues, penalties, and compliances obligations, past, not future, but it was also not granted. Do you think that this is a correct understanding, a correct observation of the court, or you think that otherwise this is not a clean slate? If a particular bidder or a resolution applicant has to go to pillar and post and everywhere to all these departments, then it is not a clean slate. At least the order should have mentioned that all the past dues and obligations are extinguished, not the future.
So we look at this relief number 11, which is also, of course, mentioned and talked about by NCLAT in detail. And this is what you're talking about. Now let's break it up. And it says various government authorities. Starts with CBDT, that is income tax, then talks about GST, PF, ESIC, food safety or FSSAI, and then talks about Maharashtra Pollution Control Board, fire authorities, land, stamp. So these are the authorities that they've talked about. And then they've said that provide the CD and successful bidder relief from all past litigations, tax dues, penalties, and compliance obligations, and continuation of existing certificates. So, what basically this relief is asking for is more than relief from tax dues, penalties, or settlement of liabilities. It is saying that in case an assessment is ongoing, then that assessment should be closed by NCLT order. It will mean that in case there are any compliances which are pending in the past for PF, then the compliances should be waived. In case there are certain returns that were not filed in income tax or GST, then that process should be those pendencies should be waived. So I believe that one, as resolution professionals, as RPs, as liquidators, we should, of course, we try anyways our best to get claims from all these authorities. And whenever the claims don't come, we do find resolution plans saying that since there was no there was no claim filed by this authority, but there are still some dues that are reflecting in the financial statements or some other IM, then those dues will be settled with no payment. This is normally what we see in resolution plans. But as I see in some of the resolution plan that we are implementing, we do find that PF authorities, even after the plan has been approved by NCLT, continue to follow up with the company to close certain assessments, close certain procedural matters. Even with income tax, we have seen that for them to close the demands, they seek a procedure to be followed. So I don't find that I find that yes, settlement of dues is something that happens and that should continue, whereas the proceedings or the procedure to stop those dues to be required to be paid, I believe that procedure should be completed, and that is what is the intent of declining condition number 11 here by the NCLAT.
Another relief which was sought, that was a unique relief which was sought. Now the bidder is saying sought assignment of trading liabilities to the applicant. Means all the trading liabilities should be assigned to the applicant, and conversion of other creditors' claim into capital reserve or security premium or profit and loss account for share issuance post acquisition. Now this particular relief was targeting to circumvent the implication of section 41 subsection 1 of Income Tax Act and section 28 subsection 4 of Income Tax Act, which was not granted to the bidder. So therefore the kind of capital restructuring was sought by the bidder, that was not granted. And this was also not said that you go to appropriate authority, because there is no appropriate authority. So NCLT does not have power to say that the assignment will go to the capital reserve or it will go to a security premium, because this is something which is an issue of company law. This is an issue of income tax law. Whether after the resolution plan is approved, what kind of structure would be suitable to a particular person, whether that would be friendly for income tax department or a company law department, that is not something the NCLT can give. No concession can be granted which is impacting the affairs of the company after the resolution plan is approved. So that is not. So this particular grant which was asked, this actually would have impacted the period after the resolution plan is approved, means assignment, conversion to capital reserve, going to profit and loss account, like assignment and then security premium. So this was not granted. So it has to be dealt with by the bidder or a resolution applicant separately, whether income tax is applicable or not. So all kind of structuring, whatever this bidder tried, that would not be granted in future, and that was rightly not granted. The bidder also asked to waive penalties, interest or late filing for the pre-transfer date non-compliances with industry-specific regulations like environmental, food safety, ISO, fire services, etc., and allow a 24-month extension. So this is also post-transfer. This is also post-transfer date reliefs and concessions. So this was also not granted. However, he was asked to go to relevant authorities. Now, think of a situation that during CIRP or during liquidation process, there were a lot of non-compliances to the environmental department, food safety department, ISO, fire services. So all these non-compliances, this you have to apply to the relevant department. It is not NCLT who actually will grant you relief. So this was rightly, in fact, not granted. The other concession was to allow the successful bidder to continue and renew the fire license without additional conditions or penalties. Now, the NCLT cannot give directions to fire department that you should do this to this corporate debtor in future. Fire department will do everything as per their own norms, as per their own law. A fire department will not adhere to what NCLT says them to do in future. That was also not granted. So, in case we see the overall trend in NCLT order, which is upheld by NCLAT with lot of observations in favor of NCLT and against the bidder, we can see that any directions to an outside authority which is applicable to a period after the transfer date is not granted. Ankit, I think you can also see like there are many such not granted.
So let's talk about this one. Let's talk about the requirement or the sought concession was to waive penalties, interest, or late fees for pre-transfer date non-compliance with industry-specific regulations. So here, one thought process is to put it the way it is right now, and the other way is to say that since no claim has been received till the CRP commencement date on account of penalties, interest, or late filing fees for non-compliance by food safety authorities or ISO, we are saying that they are settled with zero amount. And similarly, we say that in case there are any such dues which are which come on the surface uh, for the CRP period, then those will be taken into consideration as CRP cost. Now, if you word it like that, it is possible to approve it. But as soon as you say that this is a concession or a waiver and you are asking it for an indefinite period of time, then there is a problem.
The bidder asked for directions to insurance companies that all the existing insurance policies of this company should be transferred to the bidder without any additional cost or all pre-date liability. This was also not granted. However, the bidder was asked to go to the insurance companies and with a request. Now, what another see very important relief which was not granted is the restructured balance sheet shall take effect from the transfer date with no liabilities of any nature imposed on the successful bidder or the corporate debtor on its implementation. Totally not granted, because see, this is also something that he's asking after the resolution plan is approved or after the liquidation is approved or sale of the liquidation is approved. The bidder even endeavored to seek a very unique relief or a concession from NCLT. The bidder asked that the direction should be given to extinguish existing share capital against accumulated losses. Second, issue 30 crores equity shares against the security premium balance. Convert reservant surpluses into bonus shares without penalties. Treat 8.19 crore paid as consideration towards assignment of debt. All this was not granted. So because all this pertains to a period post approval of liquidation as a going concern or post approval of resolution plan. As I said, all this would not be allowed in case it pertains to a period which is after the transfer date or after the insolvency commencement date. So, direction was also sought to approve the revised shareholding structure of the corporate debtor. In that revised shareholding structure, even the bidder said that this much share will be allotted to A, B, C. It was all not granted, and the NCLT was very clear in saying that you follow the process of that particular authority or and then approach that authority. That is not something which is within the powers of NCLT. Also, the directions were sought to instruct the ROC not to levy fines, penalties, or charges for non-filing of ROC forms with MCA portal. That was also not granted, and it was again directed you follow the process and go to that department. Ankit, there are such other, like starting with the 29th relief, maybe you can actually say in your own way.
So 29th relief is about post-acquisition. The CD board of directors shall be reconstituted. Existing directors will cease automatically. New members will be appointed. Normally, we see that in the resolution plan, it is provided that the existing board of directors will be removed and the new board of directors will be appointed, and that the company will complete the required process at the ROC to get this implemented. Then next one is the ROC is directed to complete all formalities to appoint the recommended directors, enabling the CD to file or require statutory returns. So again, ROC, a direction to the ROC within the NCLT order was requested, which again was something that NCLT said you may take up with the concerned authorities. We find ROC pretty compliant and pretty cooperative when we go with the resolution plan and seek ROC's intervention in deleting the directors from the back end and then file the requisite forms to appoint the new directors. Yes, but this is the first process that we see is happening when a resolution plan is approved by NCLT, that at the back end, the ROC replaces the existing directors with the new directors which are proposed in the resolution plan through an application which is filed by the company along with the approved resolution plan. But here this was requested as part of the reliefs and concessions. Relief to condone delays in holding AGMs and filing board reports followed by financial statements. Again, it said may apply with the NCLT said that this may be applied with the concerned authorities. We see that wherever we have old returns which are pending, we are able to file them through the GNL form, and that GNL form can be filed by the resolution professional or by the liquidator without any additional fee as well. That is how the ROC or the MCA has also structured the filing of earlier forms that have not been filed. The ROC may be approached to update the registered address of the CD. So that again is something that they said you apply with the concerned authorities. Registered address or the registered office of the company, which is with the MCA, there is a simple form that is filed along with various annexures, along with some pictures, along with proof that this is the registered address of the company. The company has operations there. So ROC, that process needs to be followed by the company. This cannot be automatically granted through an NCLT order. The ROC may be approached to adopt the revised memorandum and articles. Again, a process needs to be followed to replace the new MOA, AOA in the records of the company. You can't bypass that as per this order. The ROC may be approached to facilitate share capital reduction and allotment of shares bonus. So again, once the directors are appointed, we talk about extinguishment of the existing share capital, and then we add the NCLT order for that extinguishment, and then we, of course, allot new shares using Pass 3. This is the process we follow when we are implementing resolution plans. Sybil, very interesting that this concession was asked for, that you ask civil authorities to erase whatever records they have for defaults by this company so that this company can then have a clean slate. Here again, the NCLT asks the the successful bidder in this case, in the liquidation process, to approach the relevant authorities. So in this case, one can approach CIBIL, one can approach the reporting banks which are giving this information to CIBIL and ask them to consider the clean slate principle and remove those entries from the records of the company. Then, of course, you have a direction which was sought for the liquidator and stakeholders to cooperate with the CD, assist in updating land and asset records, and hand over all original documents within 15 days. So again, they said you apply with the concerned authorities. We believe that this is reasonable to say that yes, once the payments have been made, the original document should be handed over within a specific date. We have seen such clauses go through in resolution plans. That's it. This is that big list of things that were asked. Then finally, NCLT said that you go to the concerned authority and close it with them.
If we analyze these 40 reliefs, and out of the 40, 22 was granted and 18 was not granted. In case we analyze the intent and the principle, finally we can conclude that reliefs necessary for smoother takeover and running the corporate debtor as a going concern were allowed. Basically, operational continuity. Anything which is a direction to liquidator or RP or the creditors, that was allowed. Coming to the second category, whenever the reliefs in fact was asked by way of directions to statutory authorities to for basically for additional tax benefits, for statutory exemptions, and for even rewriting the law, once the resolution plan is approved, that was not granted. Anything which is not within the powers of NCLT and there is a separate forum, there is a separate authority who will look into this. It was said that you go and approach those authorities. Those authorities will consider that this company has come through the insolvency process. So therefore, this is a new management. This is not an old management. For all the past non-compliances will be closed and a fresh start would be given to the new resolution applicant. So now in this case, let us understand what NCLAT. In fact, NCLAT, we can also see the question of law before NCLAT was whether NCLT has powers under section 60 subsection 5 of the IBC to grant extensive reliefs and concessions to a successful bidder or a resolution applicant beyond those necessary for operational continuity, and whether denial of certain reliefs constitute an error warranting appellate intervention. Now, the proceedings before NCLAT, there were a lot of arguments. Even the earlier case of Devinder Singh, liquidator of Venus Rolling Mills Private Limited versus Centec International Private Limited, was also quoted by the applicant. Even Shiv Shakti Interglobe Exports Private Limited versus KTC Food Private Limited, a 2022 Supreme Court judgment, NCLAT judgment was also quoted. And finally, the NCLAT said very clearly, waiver, the actual held portion of NCLAT says, a bare look of the relief as contained in prayer 11 indicate that the prayers made by appellant is too wide and general, covering large number of authorities, local bodies and tax authorities. The mere fact that appellant has been declared successful bidder in auction of corporate debtor as a going concern does not entitle the appellant to claim all kinds of reliefs which can be imagined by the appellant. Benefit from all statutory compliances. We are surprised to note the extent of relief claimed at item number 11, which runs into 10 columns. Reliefs which are sought in item number 11 is neither admissible nor could not even prayed by the appellant successful bidder. Filing of such application by successful bidder is nothing but waste of time of the court. Again, for relief 13, the NCLAT said, post-acquisition, any debt owed to financial creditors for any trading liability and other than capital in nature by the corporate debtor shall be assigned to the applicant, and all other creditors shall be converted into capital reserve or security premium or write back through profit and loss account, and the same can be utilized for issue of shares. NCLAT agreed this relief was rightly rejected. Specific to this relief, that there is no power with NCLT to say that all this assignment will be converted into a capital reserve or a share premium. The bidder, in fact, tried to circumvent the income tax liability under Section 41, subsection 1 and Section 28, subsection 4 of Income Tax Act by seeking a relief that all these trading liabilities or other financial creditors liabilities which are getting reduced or extinguished, I should be allowed to convert that into a capital reserve or share premium or even write back through profit and loss account and utilize for issue of shares. And this conversion will take effect immediately on transfer date. So this was rightly not allowed by NCLT, and NCLAT also said that this is very correctly rejected or not allowed by NCLT, because this is something which actually will happen after the resolution plan is approved. It is not relating to the period prior to insolvency commencement date or even prior to transfer date. Observation of NCLAT is very important again, saying mere fact that no specific reason has been given in column 2 does not vitiate the order. There is no statutory entitlement of the appellant to claim a particular relief, and relief has been granted by the adjudicating authority only with the intent and purpose to see that the corporate debtor is run by a successful bidder who have purchased the same as a going concern. Now, about the appellant's argument that in the case titled as Davinder Singh, the liquidator of Venus Rolling Mill Private Limited versus Shamtek International Private Limited, the NCLT Mumbai bench had granted broad reliefs and concessions to the successful bidder post liquidation, and that same should apply to the successful bidder or the appellant in this case. So NCLAT in fact referred that particular order of NCLT saying that on and from the acquisition date, all the claims or demands made by or liabilities or obligations owed or payable to any creditors, including government dues, whether admitted or not, due or contingent, known or unknown, direct or indirect, whether admitted or not, due or contingent, asserted or unasserted, crystallized or not crystallized, known or unknown, secured or unsecured, disputed or undisputed in relation to any period prior to acquisition date be written off in full and shall stand permanently extinguished. The above referred prayer was not granted. However, the applicant was given liberty to approach the appropriate and concerned authority. So, therefore, the reliance on Devinder Singh was not correctly taken by NCLT. Finally, what was finally held in view of the above, the adjudicating authority has taken a due consideration of the order of NCLT Mumbai bench. So that's what is the final decision was that the NCLT has rightly held that some of the reliefs are granted, some are not granted. To conclude, yes, Ankit, would you be able to conclude the basic principle? And then I will take what we need to do as a resolution applicant or as a liquidator, what we need to advise to our successful bidders or to resolution applicants.
So basic principle, I believe, is to maintain the sanctity of claims that are coming in or that had to come in till the CRP commencement date, seek release with respect to all those claims, talk about the CRP period separately, and then talk about how the and of course the resolution applicant needs to understand that what are the procedures, what are the assessments, what are the other procedures that they will have to take up separately before the income tax department, before the GST authorities, before other authorities. They can't just ask for a blanket approval, blanket ban. They will have to complete the process if any process is required to be completed. Wherever they are getting a company as a going concern, as a resolution applicant, or as a liquidator, of course, they will benefit from continuity of any licenses or any approvals or any authority which has granted anything to the company. That continuity is something, of course, that they can ask for, but not for fresh licenses, not for some fresh reliefs.
We, as resolution professional or as a liquidator, should advise our successful bidders or even successful resolution applicant not to go for very large and even very kind of broad concessions and reliefs. It has to be a very specific, and it should be pertaining to a period either prior to insolvency commencement date or even prior to transfer date, because a successful applicant or a successful bidder would not be even responsible for the liquidation period obligations or for the CIRP period obligations. So therefore, any concession which is pertaining to this period, that means during liquidation period, during CIRP period, or prior to insolvency commencement date, those all financial obligations would be completely extinguished. Any kind of offenses would also be extinguished under section 32 capital A. But anything that we ask which pertains to a period or a date which is after the transfer date, after the approval of the resolution plan date, that probably would not be allowed. Anything that is pertaining to any sectoral regulator or anything which pertains to any authority which has a separate processes, all those processes will have to be done. and it is not possible that without doing the processes, without making the applications, everything is possible through the NCLT order. That is not possible. So it is very clearly advised that be aware that all these efforts will have to be made by the bidders or the resolution applicants. So this was the intent of analyzing this judgment of NCLAT, which is very, very recent judgment. It was a judgment which was on 1st of September 2025. It is as recent, and it is from Justice Ashok Bhushan and and Mr. Arun Baroka. So this order of NCLAT would be seen as a kind of clarification on various concessions and reliefs. Thank you.